it's rolling. 1 1 2 3. Yep, it's recording. So yeah, today's workshop will be regard specifically market structure cycle tool specifically. We go through the settings, through the explanations, guidelines, and so on, so on. Anyway, so let's get rid of the ranges. So you can work with the daily specifically. So let's start one by one. So again, on the info section, there will be all the details regards the settings in the tool. So labels, you can change bigger, smaller regards that. Maybe let's go through general table. It enables, disables the prime table, which basically will give us, let's example click daily as an example. So it's gonna show us the prime conditions, prime setup for specific time frames. So on this case, it will show us 3 things. Before we had as well range, but now as we have range and market structure separated, it basically will show the condition of market structure, show the condition of power index, and where exactly we are in case an accumulation or distribution, right? So if we go again through this, so this basically enables, disables table. So yeah, let's just go through one by one. So first column, it's just enable specific time frame. So let's say we're gonna go through daily's time frame. So let's disable everything. So we enable, that enables whatever you have clicked on specific time frames, you're gonna enable everything. So we want to see market structure, so we click the market structure. So that's market structure storyline. So what does it tell? Shows us, it shows when we had the last bullish or bearish market structures break, right? I need to still add the triangles, either it was bearish break, bullish break, and so on, but it's gonna show the last condition. As you can see, triangle up, it's basically mean we have bullish break, right? How we can see does it been bullish break or bearish break? If we add market structures cloud, so we're gonna see, so for market structures break condition, we need what? We need sweep of the low side and sweep of the high side, right? So we need sweep on both sides, or basically sweep on the market structures cloud. So the last liquidity we can see structural here, on structural liquidity here. So bullish break will be if we sweep the liquidity on the low side and sweep liquidity on the upside, right? Same as bearish break, if we sweep liquidity to upside and sweep liquidity to the downside, that will be bearish break, right? So this basically market structure storyline shows us, do we have a bullish market structure, bearish market structure, bullish market structure, bearish market structure, bullish market structure, bearish market structure. So that's regards market structure storyline. Liquidity, this will give us our market structures pivot points on the past, so we are tracking them as the liquidity levels, right? So example here, so this was the last bullish market structures break, so we know what's the market structures job is what? Establish bullish or bearish market structures conditions, right? Market structures break, and if it's through breakout, then market structures job establish trend and seek all liquidity. So here market structure establish break, established bullish break, bullish trend condition. So this accumulation distribution will change to the D, which will be distribution. So that means bullish distribution, right? So how we know it's bullish or bearish distribution? So you look at market structure is green, so it means okay, market structure is what? In bullish distribution, signs this point, right? Signs this point, market structure is seeking for higher liquidity, right? So from this point, market structure's job was to take all liquidity, all liquidity, just absolutely beautiful liquidity cluster, right? What happens? We hit that last liquidity level. Whenever we interact with that last liquidity level, it's gonna be what? It's gonna be last liquidities, aka storyline, like last liquidity sweep, right? So basically this, we constantly are tracking this droplet will show the last liquidity level when swept, right? So it's basically shows us it's basically sign of strength, sign of weakness for market structure, because like on daily's market structure, right, from this point we are in bullish trend. So market structure's job is what? Market structure's job is to hit liquidity. It can pull back. When it comes back inside in the market structure's cloud, that's gonna change from distribution to the accumulation, right? When price was inside, that will be accumulation phase. So in accumulation phase, what we're anticipating, we're just accumulating, and we're gonna, market structure's job is what? We still bullish trend, bullish market structure. So what we want to see, market structure need to take out again last liquidity, right? Last liquidity level. Could we anticipate this pullback? This last liquidity level at that point was what? Sign of weakness, right? Because we swept and we rejected. So this point, this liquidity level was same last structural level, which was swept, and we failed to reclaim and go high, take high liquidity, right? So we rejected. So what we anticipate, okay, we might to make a pullback, right? How far we might like to have a pullback? Either, that will be new structural point. That's the last structural point. We might to push back 50%. You can see here we pull 50%. What's that? That's bullish impulse correction, impulse, correction, impulse, right? Absolutely fucking textbook. So at this sign of weakness, how this pullback will be delivered, obviously with daily ranges, right? Failing the opens, sign of weakness on daily ranges, basically. Anyway, so that's sign of weakness on structure. So we come back 50% pullback from this to this in the range. We want to see some daily, again we want to see bullish ranges, low day low day golden setups, low day week setups, and so on, right? So we want to see daily sweeps, 8-hour sweeps, right? And daily range start to deliver where? Again, that next liquidity level. Again, it takes that liquidity level. That liquidity level will be what? Will be resistance as a storyline, right? So it basically, again, that's Wednesday, that's Tuesday's high. So we basically make probably here, yep, we can make 8-hour peak from mesh high. So daily's golden template. We failed the liquidity level, so structure fails to go higher. We again drop. We drop where? Again, 50% in the structure. So again, we have what? We drop below 50% of the what? Of the last structural low and structural high, right? Impulse, correction, impulse. So healthy 50% retracement, opens new day, open is reclaimed, range is bullish. What is the target? Structural high. Bank takes the high, reclaims. Where are we heading? To the liquidity above. So basically that's what's the structure's job. Structure's job is to basically establish bullish trend and take the liquidity and rinse repeat, basically. And rinse repeat. 1 second. So that we can track from market structure. Where is the market structure's condition is bullish, bearish, and so on. So on. That's specifically from the market structure storyline. From liquidity levels for us is the targets. For liquidity levels for us targets, and liquidity levels is the first sign of strength, sign of weakness for anticipating either pullback or maybe reversal. If it's pullback, okay, do we gonna come back to ICI impulse, like you do, like example here, right? We took that liquidity, we felt to go higher. It's like this is a really nice invalidation. Why? Because next liquidity is quite far, and this one we reject is like you have nice invalidation, basically saying structural have weakness, structural failed to go higher. So we sweep this, we come back. We know there is, if it's pullback, it's either going to be 50% of the last structural range, ICI, that's exactly here, or we're gonna pull back, retesting structural break and then go higher, or that could be early sign for reversal, invalidating that, and if again if structure fails to go higher and we invalidate bullish break, and that's if we drop and fail that level, that will instantly be what? Failed breakout. That's mean market structures condition will change to yellow. If we have a failed breakout, that will be yellow. So in that case, we are targeting what? Opposite liquidity, right? We will target opposite liquidity. Stuff like that. So yep. So when the price will be like from the chart, so we can instantly cover ICI, which is impulse correction impulse. When we will have a retracement and we are inside in the bullish bearish impulse correction impulse, you will have a plus or minus sign on the in this window. Actually, we can have a look. If I do bar replay, does it's gonna show? So let's say we had this pullback and price was below that 50% of the structure, right exactly here. Does it I'm not sure if this shows on bar replay or not. Oh, it does. So basically, alright, cool. So basically this table shows you the conditions what you in the bar replay as well, which is interesting. I talked this only in live. So basically we can see here what we push up, we took the liquidity and we rejected, right? We rejected, and we can see market structure condition is what? Bullish, right? And we in positive ICI. What does it mean? It means the price currently is below 50% of this range, right? Which means like we have bullish market structure break. We just want to see how we again targeting liquidity and keeping pushing higher, right? That's all we want to see. So that's nice to know. As I said, from we reclaim that level, now we basically all week, that's Monday, yeah, all week we've been pushing higher, target that specific liquidity. So bam. Next one will be, okay, let's cover Crux is still no sound here, hopefully in your recording later. Man, I really hope there is sound. I will check it later on. If no, we'll need to record it. Anyways, 25 minutes. Make 112. Now it's on my recording. It shows it's record. Anyways, I will continue, and if it doesn't record properly, I will record it. So yeah, basically that's. Oh man, we are nicely on the recording and live. We are hitting that liquidity. I think beautiful. Come on, babe. Come on, bang, nearly there. So you will see this line will appear here. There is slight bug. If one candle talks multiple levels, it's gonna appear on the first, not on the last level. Like example here, you can see this candle took out this level. At that moment, that storyline, that last liquidity storyline wasn't here, which should be there, but it will be here, just because one candle hits two levels. That's the kind of slight bug is there. So yep, we can see we hit that level. So congratulations who was bullish holding trades, having nice bias towards this side. So yeah. So that's regards the market structure, right? So that's regards the market structure. So that regards market structure, yep, again we have market structure storyline, which basically shows us what conditions we are in the market structure. If we have a pullback inside in the market structure's cloud, that's what? That's accumulation, right? So it's basically bullish break. We are bullish trend in the market structure. We pull back into accumulation. We want to see, if it pulls all the way 50%, like bullish, ACI condition, impulse correction impulse, and we want to see this low of the days, weekly golden template of the weekly, low of the day golden templates, for price to deliver the why, because to deliver market structure, so ranges job is to deliver market structure's intention, right? So we know what's the intention for market structure. Take liquidity, take liquidity, take liquidity, take liquidity, right? How market structure will deliver price action with the ranges. So we want to see bullish daily range, bullish daily range, bullish daily range, bullish daily range, right? We want to see daily ranges bullish, delivery to take delivering the market structure's intention, basically. So that's regards impulse correction impulse. Let's cover power index. So basically power index is where we can see aggressive buyers or sellers being in control or not, right? So if we disable liquidity, market liquidity, leave just the power index. So basically what this is gonna show, it's gonna show where aggressive buyers, aggressive sellers steps in. Just let me reload. So power index is basically power index tracks the imbalances, fair value gaps. And what's the fair value gap? Job is to mitigate and deliver high price, right? So we can see from, let's say, from this point, bulls. So basically we here on this accumulation we had the exchange from bears being aggressively in control, exchange changing hands in the bulls, right? So we basically all these bearish fair value gaps, bearish imbalances get delivered lower and got invalidated. We push above, mitigated, retest, and aggressive buyer steps in, push the price up. We come down, this push down, obviously we have some aggressive price action here, so we come back, mitigate. kinda chop around. This level would be tracking all the way here, all the way before we like this exactly high. If you see, like, man, it's just, you know, the precision is crazy. So basically all this push high, exactly we have what? Aggressive drop here. So, you know, aggressive sellers is pushing price down. We come back, mitigate, aggressive sellers still pushing price down. We push price down. Look at this aggressive price action. We drop lower. We again push in. Aggressive seller steps in, push price again lower, and then what happens? We exchange hands. So basically, when we have a, you know, invalidation of aggressive sellers, because basically this level comes from this price action, this aggressive sellers in control, and then we invalidate this level. So basically what we do, we have exchange hands from aggressive sellers to aggressive buyers, right? So buyers in control. So basically whenever price is above power index, it will be green. Whenever price is below power index, it will be red. It's basically saying, does aggressive buyers is in control or aggressive sellers is in control, right? So aggressive buyer steps in, bang, we push price in, again push in, push price up. We come back where? Mitigating these aggressive buyers again steps in and again push price higher. Beautiful. So basically how the so basically why we track the power index and specifically market structure. So if you hit the back market structure, that's so basically both together provides us the prime setup. What the prime setup means? Prime setup means that we are tracking when both are in line in same direction. It means we have a bullish or bearish market structures breakout and aggressive buyers or sellers is in line in that direction, delivering this bullish bearish breakout. So basically where we can see where from what level we were, aggressively bullish on arrow. So basically sorry, so basically from this level, this is the last level where we broke out. That's the bullish structure. We've been trending since this point, right? So, and this is the interaction. So basically this is where we flipped power index bullish, right, in the same time. So basically once we flipped bullish on power index and we flip bullish on market structure. So since this point we've been bullish. So what's the targets? What's the point that we have a bullish traffic lights on arrow on daily time frame? So basically if we hit on the liquidity, so from this point daily had on bullish prime setup. So from this point we wanted align with daily ranges to deliver, and we take the liquidity, come back again as soon we have a bullish daily sign of strength on range, deliver and take out this liquidity, right? So if we quickly hit on daily range, daily's manipulation cycle. So basically from this point, we are primed up, daily is primed up, structure bullish, power index bullish. So from this point we want to see the strength on the range, so on the daily ranges for delivery of all these levels, right? So where would we see that? So this specific Friday we can see opening price reclaim, that's bullish, and we have manipulation low, that's bullish, right? So from this point range will be green as well, bullish. Just let me change the range label large so it's in lines nicely. So range would be bullish from this point as well. We break out, so range is bullish, structure bullish, prime setup, so we target the liquidity, it pulls back. It's on this specific day. This is London session, that's UK time 7 o'clock. What we have bang, we have golden template, low of the day, 8-hour sweep. From this point, that's the first sign of the strength of the daily range. What we want to see, reclaim the open and target this liquidity, and just absolutely delivers beautifully to the to the dollar all the way, takes out and starts to fail lower. Starts to fail lower. Come back in next day, we have bearish daily range, we drop back, can accumulate, we have some manipulation cycle high, delivers all the way down. Now again we have a, so basically still bullish expectation to go higher, to deliver higher, till proven otherwise. Till proven otherwise means if we see manipulation for manipulation cycle itself, take low, tail low, and we start to see this, that's mean okay, we might to come lower. Or if we come and hit structural low, that's mean we hit the market structures, we have a new bearish break, right? Because we swept the high, swept the low. But from this point, we're still targeting this new high. So this is remembering that in that market structures cloud, that's just pullback, yeah, ICI. So that would be that bullish ICI. And what we have that's Thursday, manipulation cycle low, bank peak formation, stage 1, 2, and we hitting the stage 3, opposite side of manipulation cycle. So basically what I'm trying to say, for market structure to deliver to there, we want to see how ranges, aka daily ranges, have a sign of strength, reclimb, right? So basically we want to see how open price holds, and we have a push to higher. And you can see again we sweep, it opens new day, we drop with some news, like like if you look at the context, like this drop, are you bearish after this kind of drop? No, it drops into where? In daily's power index. So we drop in mitigating some imbalances, aggressive buyer steps in, push up, new days opens, reclaims the open, reclaims the manipulation low. So stage 1, stage 2, stage 3, stage 1, 2, 3, range delivers, market structure takes out the liquidity, right? So bang, 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 bang. So yeah, let's get rid of the range. So that's regards power index and market structure, which together gives us the prime setups. Prime setups basically when we have a when the market is primed up for trending above or trending lower and hitting that liquidity levels on the structure side. So if we so let's cover quickly ConX, which is contraction expansion, which is this in table CE, which is contraction expansion. So contraction expansion is basically just again, let's get rid of power index, and yeah, we can leave the rest of it. So for this we need market structures cloud. So contraction expansion is basically highlights market structures cloud when we have either contraction in market structure or expansion in market structure. So first let's cover contraction. So and when we have contraction expansion, is basically shows there a tick mark. I think it's tick mark. Yeah, it shows the tick mark that says okay, your market structure at the moment being contracting. So we just enable contracting, so you will see we have some sections highlighted. When you go back and do case studies, and basically you will ask yourself, okay, what characteristics, how it looks when market reversing from one side to another side, from one side to another side. Because if we get rid of the price, We'll say get rid of the liquidity and market structure. And we just look at the, we are just 1 second, get me reload this, something like this. So we have only market structures cloud, something like this, and we disable the price. So what you want to study is like, okay, what characteristics we have whenever we reversing, like reversing, you know, reversing or continue, whatever. Basically, whenever we have a kind of impulsive move, right? And what you will notice that we have a structure being contracting, or basically coiling down. And you will notice that coiling down, which basically here it's highlights when we have a structural lows, lower lows, and we have higher highs, right? High lows or lower highs, or you know, whatever name is it. So basically, if we mark this structural point comes from here, and that's come from here, this comes from here, and this comes from here, right? So basically, you can see we start to coil up, and it's basically whenever it's confirmed, it's gonna highlight, okay, structure being, you know, stepping down or and stepping up. So we basically starting to coil up. Usually it will be, you know, before the breakout. We don't know, you're like, okay, you don't know which direction which you need to basically read, okay, from, you know, sign of weakness, sign of strength of the structure, you know, where is the last liquidity and what the range does, right? Which there's the range has strengths, the range has weakness, and so on. So basically, yeah, what we are focusing on specifically when we have a contraction, again, high the range, low the range. So basically, this is daily structure. We're focusing specifically on high the day, low the day setups, you know, and we can see, you know, we have this. There we had this liquidity. So if we go back on back liquidity. You know, we had a liquidity sweep, I presume here, structural sweep, and it's like, okay, we have weakness, so we focus on stage 1, 2, 3 on the ranges, right? So example here, we had this last sweep, bang. So if we fail to go higher, because you can see we had nice liquidity up here, right? If we fail to go high and take this liquidity, so okay, either we're gonna just pull back to where structural 50%, right? Either we're gonna pull back 50% of the high low, the bullish ICI, and then we want to see low day starting to target that structural lows, or we're gonna hit those opposite side of liquidity, right? So we pull back, we create new structural points, so kind of double bottom for retail, we bang bang bang, if you have a new day, fails to open, what the range does, the range delivers, market structure's intention. What's the intention? Take out this liquidity, right? Bang, we take out the liquidity again. Now we, from this structural point to this one, we pull back where? Bearish ICI into power index. We had bearish structural break here, so we are bearish trend, and we pulling back in bearish ICI 50% for continuation again lower. We pull back where? Sweep this 50% from the low to high, right? And again take what? Liquidity, bang. So we basically targeting next liquidity. So basically bearish, bullish, look at the range and look at the structure where we're coming from, you know, sign of weakness, sign of strength, range, sign of weakness, sign of strength on the structure. And where's the next liquidity? So basically, yeah, it's gonna highlight whenever structure starts to coil up, coil down, right? So basically creating structural low, like lower highs and higher highs. Same thing is like when we hit the expansion. So that is opposite contraction. Contraction basically when we start coil down, you know, with lower highs and higher lows. Expansion is basically when we already manipulated both sides. Basically, you can see we swept low and we swept high, right? And you can see by the structure we starting make lower lows, and the same time we starting to make higher highs, right? So basically it means structures start to expand, and again it's gonna same as the contraction, it's will start to expand or contract before breakout, right? Before breakout, establishing trend on stuff like that. So in this case, again, what we are focusing on, low of the day, high of the day, right? In this case, low of the day gave the perfect, you know, bullish breakout, structural break, and this is exactly prime setup where power index bullish, market structure bullish, breakout, and bang, delivery, right? Here, man, again, the same thing, bullish ICI, targeting this structure, bang, delivery, low of the day, low of the week, push all the way. So, and again, when it's gonna be contraction expansion, you will see the tick mark which says, yep, the price action, while the price is in this time range, it will say, yep, it's contraction expansion. So you can go back test it and say, okay, right? So you can see here how for quite long we've been in, you know, making structural low, structural low, structural low, higher and higher, right? So you can see how we've been expanding, right? Main thing, just focus on high of the day, low of the day because of the time range, right? In this example, yeah, we have like high of the day, but like kind of in between it, so it's, you know, not the best setup. There's no much breakout. It still came back, manipulated one more time, and only then started to break out. So yeah, that's contraction expansion. So if you go all the way here, so basically this, as I said, this prime setup table which shows accumulation distribution and what condition is for market structure, what condition for power index, and it shows the, you know, does we have prime condition or not. Prime condition, you want to see either both green or either both red, or one red or red yellow or yellow green. So basically if we have a, because market structure, because power index will be either red or green, so either bearish or bullish. Market structure can be bullish, bearish, and in transition, basically yellow. When it's in yellow, it basically means we have a failed breakout on market structure. What does it mean? It means, like example here, where we have a lost market structures. So basically this is market structures break. If we broke this bullish structure and we fell back, it will say, you know, empty triangle, which means failed breakout, and this would be yellow. Why you can be already anticipating, perhaps, you know, let's say price pushed, swept, and came back, because remember, we swept, we might to be just pulling back in this impulse correction impulse, and anticipating that last trigger was to bullish side, and we already from here could anticipate, you know, we're gonna start to trend. So basically over this section, which is like traffic light thing, which means, you know, symboling for prime, so we have prime replay. So basically what does it mean? You can backtest it on the chart, when the market structure or power index or both was in same condition. So basically if we hit and we change this to daily, so now it's gonna show when market structure and power index together was bullish, bearish, or or in transition. So you can see from this point. Why from this point? Because this exactly when I marked, that's the structure, and that's the bullish structure, and that's the power index, right? From this point we establish a bullish prime setup. So from this point power index and market structure align, and we were bullish, targeting all this liquidity. So basically from this point we want to see how ranges delivers the market structure's intention, right? So you can see here is yellow. Why? Because slightly price was below power index, right? So basically this means it was green and that was red, which is in conflict of interest, right? Both of them in opposite. So it says okay, it's yellow. It's it's not in the sync. Same as here. You can see we had a sweep up, sweep down. So this will be bullish market structure break. As soon we fall below power index and the market structure breakout, we in red. So what does it mean? We want to see how ranges delivers and takes structural sweep, trajectory sweep, and so on, right? You see when it's in transition, basically invalidates power index or invalidates market structure. It's in on different conditions. So basically you go there and you can see when both are together in the sync or both are not in the sync. So basically this shows us whenever we have a traffic light system and whenever market was primed up or primed down, or in so basically when it's yellow, like I say, in transition, but you can already start to anticipate by the price action, does it gonna go up, or it's gonna come invalidate. Wow, with the ranges, with the levels, power index, market structure break, and so on, like here, right? We swept the low, swept the high, so that's bullish break, right? But we fell below, so that's what? That's failed breakout, so that will be yellow. But we pull back, we have low of the day into power index. So at low of the day setup, looks like Monday, Tuesday, it's like low of the week. So weekly is golden template, at the daily is power index. So you're already anticipating, yep, we're gonna reclaim this and start to trending, right? So you can't start to position yourself into anticipating that, next steps is to reclaim this to target the liquidity, right? And here you can choose for which time frame you want, and you can backtest it either both together for traffic lights, or you can backtest it just power index, when we were bullish, when we were bearish, or above, below, and same for market structure, right? When we are above market structure, when we are below market structure, or or power index, or this together. So that's for backtesting specifically prime setups. Prime setups are trend conditions. Prime setups are trend trades. Basically prime setups where you want to align with the range in structure's direction, right? Because that means that structure being, and power index, basically, everything being set up bullish for establishing basically trend conditions, right? So let me get rid of this. So we covered this. So one more time. If we come on, we're nearly to the next one. So I have definitely anticipated, like, give you the tip. This level is exactly same as this level. Why? If you have because this is like little liquidity cluster. When you have a multiple liquidity levels, the price will be drawn to it as a crazy. Why? Because it's, just think about it, it's shitloads of stop losses where people, whoever was selling all this line, there will be tons of stop loss. So it's easy to get opposite side of the market. So basically all this sell, whoever's selling was their stop loss. So this is all buy orders. If institutions want to accumulate, for them they easy can sell here, right? So all the stop loss is gonna fill their positions, right? So for them it's easily to fill the bags, while they maybe have the buy orders here where they push price with the sells and instantly go with the buys and so on and so on. And these last levels with gap above it is easy invalidations. What you want to see there, simply sign of weakness. What's the sign of weakness? Failing the level, right? What we can see on this price action right there. This is a 1 hour time frame. So we have a last liquidity sweep storyline, right? We push in, we reject, opens new hour, and this new hour's high fails to take out high of the day, and it's reject, right? So basically we can see price movement from this was above, below, above, below, right? So basically push. So basically this is that magical lightning sign, right? This right there, drop, retest, fail. So sign of weakness, failing the low. So here is exactly the same, right? So what happens? Everybody jumps in to buy now because it's like big ass green candle going up, right? What you can do, you can on lower time frames literally look for sign of weakness to get the best fills, the best entries on that exactly manipulation level. All right, it's these liquidity levels is the same thing as manipulation levels on the ranges, right? Yeah, so pretty much that's regards market structure cycle. Basically market structure's job is to establish trend conditions and target the higher or lower liquidity, right? And how the market structure will be delivered? Market structure will be delivered with the ranges, right? So we want to see ranges delivering market structure's intention. So while price is inside market structure's cloud, we will be in accumulation. That's the best places to get in positions before we again continue trending, right? Continue what? Distributing in this happy phase when we, distributing the price. Again, gets rid of the range so you can see we accumulating and distributing, pulling back, accumulating, distributing, right? So the easiest to get in the positions is while you're in accumulation stage, because price action will be slower. Same as here, right? Accumulating, breaking out, trending, distributing. When we're distributing, will be this symbol, while we're inside in the cloud will be this symbol, and so on, so on. So let me check again. And one more thing wanted to say. So basically using together that, like, you can purely use market structure tool without basically how everything is built up. You can purely trend just the ranges, or you can purely trend just the market structure, or if you want you can mix them together. I really find, for me specifically, following basically, if you're using just a ranges or just a market structure, then you definitely want to follow where lower time frame delivers higher time frames intention. So basically, or this is equal multi-time frame, right? So basically you want to follow multi-time frame process, because if you're using just a market structure, that's mean where you have a higher time frames, sign of strength, sign of weakness, what do you want to see there? You want to see how lower time frame starts to fail, right? Lower time frame starts to go up. That's mean then you want to, let's say, if you follow daily structure, then I really like on intraday 30 minutes 1 hour structure for the sweeps and so that's mean maybe like on lower time frame, like on 1 minute, if we go maybe on that last maybe let's go 5 minutes. 1 minute bit too far away. So that means, okay, maybe let's get rid of that liquidity for now on 30 minutes. Actually go 1 minute to be way cleaner. Actually, let's just use hourly just for example. So basically when you have your low of the days, high of the days, or your point of interest of let's say, if you're just using a structure, using just structure, so basically you want to align with the seeing sign of strength on lower time frame structure, delivering higher structures intention, right? Same for the ranges. If you're using just a range, you can follow, let's say, dailies, manipulation cycle, but you want to have a sign of weakness, sign of strength delivered already from lower time frames manipulation cycles, right? Like example here, you add a on 30 minutes we can see bullish break, right? So you have a 30-minute primed up to start the trend, right? You have a 30-minute prime up to start the trend, or you have a failed market structures break, right? We swept the high and now we swept the low, right? And you have basically this liquidity, this last liquidity level would work for what? It would work like last liquidity level is a storyline, right? We hit the liquidity levels. See, we had this 30-minute liquidity level, right? So basically what we are reading that we structurally pull back, we bounce from daily's power index. So we want to see example, if you're using 1 hour lower time frame, to start to give a sign of strength for saying, okay, my anticipation that daily's structure gonna start to go up. So we want to see how lower time frame structure starts to become a bullish. So with this is again, what is the structure's job? Hourly structure was coming down, sweeping, swept this level, swept this liquidity, and what we have, we have new hour opening, new day opening, and respecting, mitigating that, right? This would be like exactly same as the manipulation thing on the ranges. So it's mitigates, right? Mitigates. Obviously, we want to see hourly candle start to flip bullish and bang. It's does the bullish break. Bullish break on hourly, right? We have bullish break. What this does, it comes back where it comes back on where's the last structure point, next structure point. We establish bullish break on the hourly. We pull back 50% from this to this bullish ICI. We create new structural low and we bang breakout, right? And this is while the price is above this level, this zone of market structure power index, that will be, you know, primed up for 1 hour. What's 1 hour's job? What's 1 hour structure's job? Take the liquidity, bang, it's pullback. Where? In bullish ICI. What's the job? Keep going higher, taking this nice, beautiful liquidity cluster. What this does, push back, pulls back again in bullish ICI, creates new liquidity, takes out new liquidity, bang, comes back, establish what? Failed breakout. So at this point we have failed breakout. No, from this failed breakout or this, you know, bearish break, either we're gonna come, it even gives a reaction, either we're gonna come bearish ICI and start to change structure to bearish for 1 hour, or we're gonna again invalidate and hit the liquidity. As soon we hit the liquidity, you can see this market structure solid line. We establish bullish break. What's the structure's job? Take liquidity. And what does happens? Lower time frame, hourly, delivers higher time frames intention. Rinse, repeat. So yeah, either you utilizing just a market structure and just following low time frame, high time frames intention, or you combine it with the ranges, which in my view is, I think, easier, because you, for especially for intraday or doesn't matter, for, you know, for any time frame, you're focusing on that high range, low range, right? Because specifically on in Ultima, you know, the foundations, how we started, everything was about the high range, low range, you know, high day, low day, high week, low week, high session, low session, high date, low date, and so on. So we read what is market structure's intention with the sign of strength, sign of weakness, right? And then we want to inline with the daily ranges for daily structure to recognize sign of strength on daily range, sign of strength, basically daily golden templates, right? If we hit the golden templates on daily, so just, you know, strike forward, we will know what's the condition for market structure. We are primed up, so daily is bullish, so all the pro trend trades will be low day, all the low the day golden templates, because that will be low the day setups, and any counter trend of high of the day or high of golden template highs will be counter trends, right? With counter trends, we don't know, is it just a pullback or it's beginning for reversal. So basically we mainly focusing on that stage 1, 2, 3, right? In this case is stage 1, 2 failed, you know, we already have golden template from opposite side and so on. So that's the main goal of prime setups, to have a counter trend, pro trend trades. And whenever you have a counter trend, you treat it as scalp, mitigate your risk, and then if it's proofs, it fails. Like example here, it's your beautiful Asia session weekly golden template. Hive the week with daily sweep. Daily open fails, drops lower, but then what happens? In the London we have a loaded day with 8-hour sweep, which is daily's golden template, which will be pro trend. This will be counter trend, right? But still nice 8-hour cycle on weekly golden templates, right? Because it's come down to the previous 8-hour low on the London from the hive the week. So yeah, that's the main thing. Like in these cases, we want to see how ranges delivers market structures intention, right? If you go higher, you will see that maybe pullback, just waiting for the blow through, or it could just have a little noise, can have a pullback to retest, and then or even like chop around and then oh no, there is news, isn't it? Yeah, there's news later on. Yeah, after 2 hours there is news, so not gonna surprise. It's gonna hold, like slow down, and then it's gonna sweep and either drop. If it drops, beautiful, because you have small invalidation. And if I'm not sure, there might be higher time frame kilo or something. The one more thing what I guys want you to show. So like I said, this walkthrough is like really helps get rid of the gold templates. This practice, either you're just using ranges, market structures, or range job deliver market structure intention. This is really good practice for tape reading, because it will like you can readily practice just with the market structure. And like whenever we have interaction with structural cloud, structural liquidity, and power index, impulse correction impulse, ICIs, it's like either this or either this, right? So every time you have interaction with the level, you have two outcomes. For bullish scenario, for bearish scenario. How far from which level to which level. Period. That's it. Like literally, there's nothing else. You need to be able to walk through the pricing. Is like, okay, we rejected from this. What we are anticipating? Okay, this could be pullback just to 50%. It could be pullback to power index or market structure retest, or it could be invalidation and targeting opposite liquidity. How it's going to be delivered? Through the ranges, or through the low time frame market structure, if you wish. So if through the ranges, I need to see sign of weakness, sign of weakness, sign of weakness, open fail, take out, move lower. It takes out, creates low day, where in bullish ICI, sign of strength, manipulation low, stage 1, 2, stage 3. Period. We get pullback, manipulation low, manipulation high, push lower, pushing higher. Right. So one more thing what I want to guys show is this, man, like this is absolutely lifesaver, this indicator template savings. So basically what I did, I saved from 15 minutes, 30 minutes, 1 hour, 4 hour, 8 hour, daily, weekly, blah blah blah. So basically if I hit daily, let's say monthly, I hit monthly, it will be monthly, yeah, hit monthly, so it's gonna preload the indicator templates what I saved on monthly. So basically it shows me monthly structure and monthly range. So basically how it looks on the chart, on the settings. So basically on the market structure, I have enabled market structure power index, also monthlies market structure, liquidity, power index, and on range I have everything except time rotation. Or you can add that in as well if you wish. If you're for backtesting, it's really cool. So I hit that saved monthly, and I have, okay, what's the monthly's conditions? Everything is bullish. So we had monthly's power index reclaimed here, monthly structure reclaimed here, bullish structure from this level. I'm targeting what? Next liquidity. So we're anticipating absolute trending conditions here, right? We're anticipating that we are as far as the range. So if I disable the range, so basically we have, you know, monthly liquidity, market structure, and power index. Like basically three things, right? Market structure, liquidity, power index. Don't bother about cloud. And then on the range, I want to see what? I want to see, you know, open, manipulation cycle, and that's it. And this way you just hit, you know, M monthly. I was like, okay, where we are monthly? Everything's bullish, right? So my bias is monthly's delivery to get there, right? I hit, let's say, hit 8 hours. You might want to go lower, like 15 minutes. I hit 8 hours. Now I will have completely same thing, like liquidity, market structure, power index on 8 hours, and I have a manipulation cloud on 8 hours. So basically, you know, this was last liquidity sweep on 8 hours, right? This was last liquidity sweep in 8 hours. So that's next liquidity. So in 8 hours trending, I want to see what? Sign of strength on 8 hours, right? We have a sign of weakness, we fail, bang, sign of strength. So now I'm aligning in direction of what? Of 8 hour market structure, right? Bang, we're pushing again, we're pulling back. You know, this was today's choppy bollocks. And again, we're pushing higher, right? So, yeah. Or, you know, you just like go whatever, let's say hourly. I really enjoy hourly on 1 minute, you know. Same thing again, you have liquidity, market structure, power index, and the range, right? You have a manipulation cycles, you have a liquidity. If you want to see more liquidity levels in the past, you need to use the bar replay and cut it, because it loads certain levels to you know, to some point. But basically, yeah, it helps me to recognize, okay, where was the last manipulations, you know, where price could come back, mitigate, where is the next liquidity, right? The liquidity taken out, you know, bang. And specific things, which I noticed that, like, let's maybe go, I know, daily and 1 hour, which is really strong setups for market structure slash range. Is this kind of things where we have a strength on structure, strength on range, right? So basically you have strength, you're basically open already bullish, you have manipulation cycle, sign reclaim on the range, and then you have as well, you know, strength on structure. So this kind of points is really strong. So like here we have big deviation right about the last manipulation high. But let's say we have this last liquidity sweep, which works as sign of weakness for structure, and we already confirmed weakness on daily open, right? Only then we want to see what some kind of manipulation highs for, you know, dropping lower and so on and so on. Yeah, that's kind of what I want to show, that these templates, like basically I saved, yeah, from 15. So basically I saved, you know, all of them from yearly to 15 minutes, so only I have specific things. So it's, you know, when I look at the screener and then just to say, okay, I need look at daily, right? I check daily, or, you know, look monthly. As well helps you for outlooks when you look, you know, every week, every month, marking up. And at the same time, I need to save two more, which will be like high time frame, low time frame. High time frame basically would be probably daily to yearly, with dailies. Yeah, basically all of them is all of this on. So basically something like this, and then on range I would have a something like this, but I'm not gonna want to see any manipulation clouds except daily. Yeah, and keep probably same 1 hour. So this would be template for higher time frame. Yeah, something like this, higher time frame. Basically, wherever I'm following a daily manipulation cycle, and as I can see, okay, week daily is bullish, weekly bullish, monthly bullish. So I'm basically looking, okay, if we pull low of the day into key level, right? If you have manipulation low, and then I can follow where is the high time frame key levels, right? For low of the day setups at the high time frame key levels. And same time, yeah, you probably 1 hour maybe is quite hectic, like 15 minutes could be, because you will have a less, will be easier. I think you even can go even smaller, but like in 15 minutes I think it's fine. Yeah, so basically you're aware of high time frame key levels, so that, okay, might be a reaction, or and looking for low day, stuff like that. But I really like the just a clean structure range once, and then you just can go through and say, okay, I'm arrived here. Man, that another level is quite far, so you can can't see even 15 minutes. So that's really old level. Yeah, we just look from this news, we're pushing up. I got entry after this push, but this wick took me out, and I wasn't, I wasn't at the charts at that point. But like during the day, I had like two break evens, one like small win, and then this one was break even taken out. I wasn't before I opened the live, it just wicked me out and then moved, because my my partial disc free is very aggressive. Yeah, anyways, that's it for today. I really hope there is sound, so I don't need to re-record. But yeah, hope this helps. Any questions, let me know. Thank you, everybody. Bye bye.